Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, February 10th, 2009. Well, today we saw a rocket ship to the downside, folks, crashing to the ground as the market sold the news of Geithner's speech. We had talked yesterday about how slow the market was in anticipation of this, and today you saw the reaction. All right, the market had all these expectations built in for all this clarity on what the government was doing. What was this bank bailout going to be? Was the stimulus plan going to pass today? Bernanke speaking at 1 right now, and all of this kind of stuff. Across the board, the market had its high hopes. You know, their hat hung on the high hopes of this market getting clarity on what was going on. And all of a sudden, before you know it, Geithner, right before Geithner came on, the market started to downtick, then uptick big, and we rallied right up into it. And you can see it right here on the intraday. And this was one of the wilder mornings I've seen lately, guys, literally in months. What you did see was an initial sell-off here to the support line on my chart on the intraday. And these are all your key levels for the intraday session, guys, and you can see how key they've been. And then you saw a little bit of a bounce right into Geithner. Geithner was coming on at 11 o'clock, which is this candle. And right as he came on, you saw a massive buy program come in as people speculated on his positive nature of his speech. And then as soon as he started to speak, markets dumped out huge. Literally from this point up here to all the way down to this low, you're talking about like $3, well, not quite 3, but close to it. I mean, it was a huge sell-off here on the SPY. Literally huge sell-off. And what we do see right now is the market trading down about 285 points on the Dow, the NASDAQ trading down 44, and the S&P are down about 30 points, basically 3+% across the board. I mean, it was huge. And just to reiterate, guys, from the high here on this buy program that came in before the sell program, you literally had the SPY trading at 86.70, and at the low of this candle, you were talking about 85 and change, low 85. So almost $2 in S&P SPY points here dropped in that amount of time, literally minutes, if not less. So truly a hard sell. Then you got to pause on the 50 moving average support. You can even see one candle down ticked right to this support we have drawn in. And guys, by the way, you guys know these lines go back way far. I mean, I could show you all the way how far these key lines go back. All right, very far here. You can see all the way back to early February, really at the beginning of February. But nonetheless, the important thing is where they are right now in this channel. And you can see that you touched one here as you hit the 50 moving average intraday. In fact, that's the 200, that's the 200 moving average. You got the bounce, and you bounced for about 2 candles, paused right on it, and then got slammed down again. And the market came all the way down to this lower trend line right around 83.75. And what you did see here is a sideways candle, and you guys should know by now, this is a bearish flag pattern. Bearish flag pattern to a T, as you see this consolidation angle right here inside big bar candles, all right? You have inside bars inside a big bar, and that can be, as long as it's angled like this, that's known as a bearish flag pattern. And what you are seeing is continued sell-off now, selling off. Most likely you'll hit this support again. Then you'll see if the double bottom holds or we sell off more. But nonetheless, guys, people not happy with the government clarity here, and that's really what you see. And this is a huge sell day for what the market's seen lately. Okay. Couple odds and ends to touch on. We already talked about Geithner. Geithner coming out, his speech, not well received at all by Wall Street. Look at the market as it sells down here, guys. This is a beautiful bearish flag pattern. Now, the one thing I want to point out, guys, I want to go to the Goldman Sachs chart because on the blog this morning, and by the way, that's a free blog on our website, we posted this chart saying that if this line breaks on Goldman Sachs, and I'm going to draw it in. Let me draw it in here. All right. I have to go back even a little further. There we go. Let's see here. All right, and just drawing this line in, folks, we said if this trend line breaks, and it actually stretches back further, but I'm not going to really mess around. Right here, if it breaks, you're going to see a pretty big sell-off in this market because Goldman's a leader. In addition, Goldman Sachs would see a big sell-off. And we posted this chart right here at this time when it just in this candle. And we said if this does break and actually closes below this trend line, right here, and you can see how important this trend line has been on Goldman, and it stretches even further back, but I don't have the time to draw it in for you guys. But nonetheless, we said if this breaks, you're going to see a massive sell-off, and this was posted on our free blog on our website, so go check that out, Rant and Rave blog. And what you did see is a close below, confirmation, and that's all she wrote. All right, look at this sell-off that happened on Goldman. You had now a nice bear flag pattern coming into fruition here with a bearish sell-off. But in any case, this was the key right here. I mean, you just had to isolate that as we did on our blog, and you knew this market was going to take a dump. No doubt about it. All right, so in any case, just notice that. Notice that trend line break. You got to close below it. The next candle, as soon as it goes below or even closes below, you know you're going to go much lower on this Goldman because it's such a key trend line breakdown. And what you did see is right into Geithner's speech. Look at the retrace. This candle went all the way up, touched a necktie. Necktie is two moving averages crossing together at that point where the price comes into it. And then that was the selling opportunity. And a bunch of those in the chat room actually took the SKF on that trade. SKF, let's touch it on that. Right here, all right? The SKF was pulling back, and people were asking, should they buy it here? Should they buy it here? I said, no, wait a little while in the chat room. Let it pull back. And sure enough, right into Geithner, it pulls back to the 20 moving average. That was the buy price right here at 125.75 to 126. And then blast off Central. Literally within a few candles, it went as high as $140 from 126. Huge move on the SKF here, up $17 today. Notice this bullish consolidation pattern, guys. I mean, I've been pointing these out throughout this video on this market. This is a short financial ETF, so consolidating this way is a bullish consolidation pattern right on top of the 200. Blast off, boom, just like that. And that's what you're looking for, folks. You're just looking for price pattern and timing and understand your trend lines, and you will make so much money in this market, it's ridiculous. All right, you just need some volatility. That's all. Yesterday was a crappy trading day. I'll be the first one to admit it because you didn't have volatility. The market was in a 5-point range all day on the S&P. It was ridiculous. But you know what? You stick those days out. You sit on the sidelines, sit on your hands. You make sure you don't do stupid trades. I know a lot of traders, especially the amateurs and the beginners out there, that have to be in a trade. You don't have to be in anything. Cash is a position. You'll be making your little money market, payments on that. All right? So the key is you sit on the sidelines, then you get moves like this today, and you profit like crazy. All right? Going back to the SPY, beautiful breakdown. I just called this, guys, a minute ago. I said, look for the double bottom support line coming into play. Where are we right now on this SPY? Double bottom support. So you have double bottom angled here, playing that. That's a beautiful play right there. And the market continues to look very bearish here, very weak, but it is now sitting on this support line. If this support line breaks, I'm going to go to the 60-minute. We're going to discuss where it's going to go next. All right, so let's get this 60-minute up. And one thing I pointed out, guys, you had this double top right here on the 60-minute. No-brainer there that there's going to be resistance. And this is what we talked about as well, folks. And I do encourage you all to come join the research center at InTheMoneyStocks.com because this is what we go over every night in the videos, in the daily market report. The Pro Trader watch list is geared towards whichever direction we think the market's going with specific plays, hidden gems reports, you name it, it's in there. Educational videos, all for a very low rate per month. And this is exactly what we pointed out. Double top right here. All right, no-brainer that there's going to be resistance on this point. All right, and you had this line that I just drew in, and I showed you guys this, I think, on yesterday's video. This line actually goes back to the end of December. That's how big this resistance line is right here. So you have to understand that. It's very imperative, and in fact, you're looking at 360-minute candles, so you can see it. Here's going back to the 30th, and you can see right in here is where that support line, all right, because remember, this is support. See how it's kind of knocking on this level to the upside? It got above it, then broke back below it. That reestablishes this resistance line. All right, so notice when the market comes back up right into this level, this is where you're hitting, and this is where you're dumping out. And then we're actually looking at the 360-minute chart, so you can see all the way back to December. This is mid-December right here, so that's how far this trend line stretches back. Now, I do want to go to the 60-minute so we can isolate it a little more here. So let me just give me a second here while I flip over. But in any case, here it is. All right, here's your double top, possible in spirit of M pattern, in fact. And we talked about that in yesterday's video as well. And you actually came all the way down through all the moving averages today, and even below the 50 moving average as well. You are coming into support, though. There are some support lines on the 60-minute you can look for. This one right here would be a good one. I'll have to draw on my trend lines. I'll do that all in the video tonight in the Research Center and the Daily Technical Analysis video at the nighttime session, where I really can spend more time isolating these charts. You guys know I got to get back to the trading floor and get back trading, but in any case, I just wanted to enlighten you all on the craziness of this market today, what's really going on out there, and again, we're awaiting Bernanke testimony right now. We already had Geithner. The stimulus package passed the Senate, still got to pass the House, I believe, and you're just absolute. Compared to yesterday, it's a 180. Literally a total reversal from yesterday's slow action as we were waiting on this Geithner isolation and market-moving activity, and then you got it today, and you see the result. It was a dead sell, the news, and the market did sell off. And Goldman told us. That chart on Goldman was perfect. That breakdown level, once it broke down, it was all downhill for this market. All right, folks. Hope to you guys join the Research Center. We'll talk to you soon. Take care.